First again, Marine Corps Brad. Oh my goodness. It's nice to know where the bulk, the main part of the stream is. Oh, you can't stay on? I'm sorry you're not feeling well. Migraines are never fun. I get them every once in a while. I get the migraines that run down the back of your neck, and it's just brutal. It's uncomfortable. Oh, I'm glad you'll watch it later. Hopefully, it's going to be a longer, a little bit longer of a stream tonight, and hope you have a happy Thanksgiving. I know I won't be on tomorrow streaming any. I might put together a video just to thank everyone for the support on the channel and to let them know I'm still going to be here. But hope you have a good evening, have a happy holidays, good Thanksgiving, eat plenty, drink water. Yeah, I appreciate it. I was going to jump on Twitter, but I don't know how Twitter notifications work. I don't get notifications on Twitter. I might have them turned off. It just might be something I did in the past. Oh, I never thought about Telegram. I should be advertising on there because I've got a Telegram account. Yeah, I'll see you later. Have a good evening, and thank you for stopping by. Oh, on Telegram, let me get in here. It is... What is it? Oh. Hey, Simon! Welcome to the live stream. Yeah, it's just my name, Frank Melgeorge. Yeah, if there's some kind of trading group on there, or a bro group. Yeah, I know. I know Trapper wanted to be in here too. I don't know. Does he? I think he might work later hours. Yep. So what do you got going on today, Mister? What do you got going on, Simon? Make any good trades today? I know I managed to get in early on some pretty decent ones. I'm hoping will pan out and be printing next week. Well, yeah, on the elliptical stair stepper, just kind of doing an audio on your headset right now. So yeah, we had some nice channels today. Not a lot of action. Pretty sure we had some low volume, and people get. Oh, oh, Danelle popped in. I didn't even see her pop in there. How are you doing this evening? So yeah, I entered into a new option position this morning. I got in at a fairly good entry. I was hoping to get back in again later, but unfortunately work got in the way. Didn't really get in the way, but I had some things I was working on that took up most of the day. Doing good, cooking up a storm. Oh, you're getting ready for Turkey Day tomorrow? So yeah, we had this early action in the morning where we had the drive down, had a drive down, bounced back up, caught a little bit of support, went back down again, and as it was coming back up, I saw it start to really get some buying pressure stepping in, and as we came up, dipped back down and started to move upward again. I knew we were going to catch that it was going to start to come up a bit. We were going to have more buying pressure step in going into midday. So I entered into a new set of bull put spreads, and looking at it, I ended up running the 34-35 bull put spreads. I got in at 21, and we end up closing the day at 18 per contract, so up 15% already on the day. Now these the bull puts that I picked up today, those are actually expiring next week because this week with the holidays, we're looking at lower volume here. Not looking to see a whole lot of volume this week. Could see the prices getting pushed down. As we saw today, it was an early push down, and we kind of, if you look throughout the day here, because right there's the end of the day. If you look, we did fight up and we did hold pretty good channels throughout the day. We had our highs and our lows, but I was looking at how much further out did I want to push to get some bull puts in, because covered calls and bull puts, those are my meat and potatoes. Those are the ones I always love to run. So when I saw this sharp decline and bounce, catch, bounce, and run back up, I knew that was a really good entry point. I figured we get some good pressure out the day, and when the price drops down low, and people hate red days, but when the price drops down low and you see it starting to recover, that's your chance when selling contracts comes in really handy. Everyone wants to go out and they want to buy calls and buy calls and buy calls. Well, time is working against you when you're buying. As a seller, there's so much more you can do. And that's why on days like today, I always love to catch bottom tick. You're not going to catch bottom tick, and if you catch bottom tick, you're risking a breakthrough. So when I saw that support come back in, that was kind of an indicator that strength is coming back in, the stock's going to move back up, and I did not see us getting back into this zone again. So that was kind of the window that I was looking for. So we're going to jump over to the option chain here. And we're, of course, going to the verticals because, the bull put spread, those are the ones that I like. I'm actually going to come over here and shrink down my camera a bit. I don't know how this is going to go with the live. But y'all are here to see the charts, not to see me, so. Did that get shrunk down there? Do I still have people in chat here? I know everyone's doing things, so it's more kind of an audio experience for some people, which is perfectly fine. Mr. Simon's out. I will pump you up at the gym right now. Pull this up. Oh, we're up. Okay, we have 3 viewers in right now. So one thing that we hadn't touched on yet, and I was thinking about it today, and wanted to kind of give you all another little trick you can look at, another little thing you can do. So we talked about collateral. Whenever you're selling a position, you have to enter collateral. Whether on a covered call, you're putting up your shares, on a cash secured put, you have to put up the money to buy the shares at the strike price you're going. And on your bull put spread, you have to put up collateral in the form of the difference between your 2 strike prices. And with AMC, a lot of your strike prices are $1 apart, so you put up $100 collateral. Now, holiday weeks, like the week we have right now, you can tend to see lower volume. You can tend to see price action pushed down. And there was something I was thinking about that, I've done it before, but I never really thought of it as an actual non-financial advice trading strategy. So if you look at your calendar, so was it December 23rd? Wait, is that a Friday? I thought in December we were going to catch a short week in here. I'm pulling up a calendar real quick to look. So yeah, Christmas is on a Saturday this week, and I haven't actually stopped to take a look yet to see if if you look, the market will be closed on the 24th, on Christmas Eve. Because if you look at your option chain, December 23rd, well, that's a Thursday, which means that is another short trading week, it's another holiday week, and it's another week where you could see lower volume in the stock market. Lower volume means, of course, that the price can be driven down during that week. Well, what does a price being driven down mean? Well, that's an opportunity if you're looking to actually pick up shares to increase your share count. That is a sign where you could end up buying the dip. So what I wanted to look at is the week before, where they end on the 17th. That is the week before, because when you put up collateral and you let your options expire, your collateral is released the following Monday. So if your options expire on the 17th, your collateral will be released on the 20th, that following Monday. So one thing that you can look at is if you were looking to enter into some bull puts on this week, say you were anticipating the stock price dropping the holiday week, dropping Christmas week, and you're like, man, if there's a good dip there, but you're the habitual share buyer. Every time you get money, you see a fairly decent dip. You're like, I'm going to buy my shares at that point. Well, it makes it to where if you get a really good rundown, you might miss out on the chance to get some bargain basement shares of AMC. So every time you enter into a bull put spread, you put up $100 collateral. Well, if you're sitting on some extra cash and you think you might slow down your trading for the month, and I believe the 17th is also when the monthlies come out. So monthlies, of course, those are what a lot of people look for. A good amount of people play the weeklies, but most people want to get in, they want to play the monthly. Well, if you're selling, you can get by nickel and diming on the weeklies. But if we look in here and see that the chain isn't really built out, there's not a whole bunch of open interest. What do we got? 4,100 is your highest contract on the low end for your 3536s. And there's not much. You're not going to see too much on your bull put above the strike price. So there really, at this point, isn't a whole lot of anticipation of the strike price moving up. We can always jump on the call side of the house, and of course we're still on December 17th. We're on the call side. So yeah, you can see we single option. There we go, much better. Open interest, of course, key psychological level, you're 40, that's your king right now. You're 45, that's your king right now. 50, everybody loves those 50s. You'll all, it seems like lately your 50 will be your king because the market is trending upwards. So people are looking for those higher highs to close out the week. So what I was actually looking at today, which I was not able to take advantage of, I was looking at doing some verticals, doing some bull put spreads, and I wanted to see something between the 33.34s and the 35.36s. Any one of these three contracts, I was looking. Oh, hey all, sorry not staying as too late, but leaving the stream on. Oh, okay, well thank you for leaving the stream on. That'll certainly helps with the YouTube algorithms. Don't forget to like, subscribe, turn on notifications, all that happy stuff. And I appreciate you stopping by, Pringleton. But yeah, I wanted to look at something for the 33.34s and the 35.36s. Any one of these three contracts. I was hoping when the price was still in, because the lower the price was, it'll increase the premium. And these are pretty far out. And they end the week before a holiday run. That was the key thing that I wanted to look at. And I'll be looking at this again. All the good stuff done. Yeah. So I was looking at these three different contracts because sitting on an extra grand. If I ran in and picked up 10 bull put spreads, that $1,000 is locked up. It's $1,000 that I won't be touching until the holiday week. So if I was looking to, get a higher premium, because the farther out date, of course, Theta's our friend, you get those further out dates, and that's more premium you're collecting, and it'll also lock that $1,000 up. If you do 10 contracts, it would lock up that $1,000, and that way it would get released to you back on the 20th. Well, if you're anticipating a market drop, that's $1,000 that you're not gonna, if you're the type when anytime you get enough to buy a share, you buy a share. Oh, hey, we got Justin in chat also. So you get that $1,000 locked up and get it released the week where you're anticipating maybe a little bit lower price action. It can kind of keep you from, buying in too early and kind of forcing you to wait until you get better price action on a lower volume week. How are you doing this evening, Justin? Any good trades today? Simon is in the house, but Simon's pumping iron right now. He's out working out at the gym today. So yeah, Justin Justin, just getting in here, was kind of going over. I did enter into some bull puts today, and those I actually got in. I don't know if you were watching the market today, but we had that huge rundown at the beginning. Huge rundown, caught a little bit of support, ran back down, and when we started working on this upward trend, when we dipped down and started to move back up again, that was where I entered into some bull puts. Those were the contracts we were talking about yesterday. And I ended up with a entry at 21, and we closed out at 18. So those are 15% up on the day. And going into Thursday, I'm really thinking we might see a little bit of a downward push, but I think we're going to see more channel bound, just like this. It might be a little bit lower, might be a little bit higher, but I don't think we're going to see a whole bunch. It's only a half day. I don't anticipate, a lot of people will be out Black Friday shopping. That's where they're going to be putting a lot of their money. So I just don't think it's going to be that high of a volume day. And we were going over, when you jumped into chat, was going over just on the option chain, looking out, because the 23rd, the weeklies, those are actually expiring on a Thursday because Christmas is on Saturday this year. The stock market will be closed on Friday. So the option chains are closing out on the Thursday before. And looking towards getting bull puts expiring the week of the 17th. So, do we have any questions in the house? Yeah, because last night was a short stream. Some things came up. I couldn't stream as long as I wanted to. I think it was like a 24, 25-minute stream. Really good stream, though. Marine Corps Brad had a lot of good questions, and hopefully I was able to answer a lot of those questions and help out. I know some people, they're just starting to get into options, and it certainly helps asking questions before you get in. Most of my questions were answered watching videos. But that was a whole lot. We're talking, probably close to or over 100 hours of watching videos, and it's a lot better in my opinion, it's a lot better having a live stream where you can go to and, like today, if people are bouncing in and out, gives them the chance to ask questions, and the chat not being flooded. It's a lot easier to see when people ask things. I'm actually looking on here. I know Trapper had asked. He was asking about when the stream was going to be. So I'm going to see if he might be on Twitter right now. Send a link over for the stream. With how tech savvy I am, you would think I would be better at doing tech stuff. I am looking for Trapper. Oh wow, looks like Devil's Advocate sent me a rather large message I'm going to have to read later. Justin, that's phenomenal. Just the support from the group here. this is a fairly a low volume stream right now. Not many people on here, but I do like being able to get out and just I don't mind doing the one-on-one Q&A with people. I don't mind just kind of letting y'all know what I'm seeing, what I'm doing. I have no problem with I don't share position size. I have no problem with letting people know positions that I'm in, or contracts that I enter. I don't think I would let people know as I was doing them, because that could technically be influencing. I don't have many viewers, but somebody might say, oh, he's influencing the market, sharing his trades and everything. I have no problem with after my trades are done and I've started them and they've had time to simmer and the market's moved away from the trade that I've done. I have no problem with sharing, where my positions are. I've got. I can actually give you all a rundown. I have 4 different sets of contracts open. I, of course, have my covered calls, which expire on Friday. I debated closing those out today, but I was not in a position signal-wise to be able to do those. And looking at them, they're not in threat of getting exercised. There's no risk of me losing my shares. And I entered into those Friday of last week, collecting a $97 premium. And those are currently worth $4. If I closed out those, they'd cost me $4 per contract. Now, granted, because I know that's going to expire worthless, I might as well just let them sit or close them out on Friday. If they drop down, if I can actually get a fill, because a lot of times when your contracts hit value of $1, it's hard to get them. It's hard to find someone who will buy them, that you can close that position out. So yeah, those will sit towards expiration. The only thing that it would be good to close those ahead of time is if I close them out on Friday, I would be able to re-enter that position. I could sell my covered calls again for next Friday, but I can do those again on Monday. I would only be losing half a day worth of theta. But yeah, it's that premium. It's nice to collect. It's nice to grow your position. And so rather than closing them out today and paying $4 per contract to close out, okay, well, that's an extra, that could be an extra $4 that I get at expiration. Oh, JB, happy Thanksgiving, man. So yeah, I'll go ahead and those, the covered calls, I'm going to go and ride those to expiration because, like I said, looking at where we're at for price, what did we close out? We closed out at 38.44. I do not see a half-day run up to $45. My covered calls are safe. They're not going anywhere. The other AMC position that I'm in and I'm up on are those bull put spreads that I bought this morning, and those are up 15%. I'm looking maybe to ride those until the middle of next week. If it looks like we get back around the 40-41 range, I'll actually ride those to expiration, because those being the 34-35 bull puts, if it runs up, if we're hanging out around the 40 range, those are never going to be a threat. A lot of the option trading that I do moves me away. The share prices, when you bottom tick or top tick, and the price runs away from where your contract is, you get peace of mind. You sit there and you don't have to close those out early. The ones I close out early are the ones where if we've seen a lot of volatility, if the price is moving around a lot, then, if you're anticipating there could be an end-of-week run, yeah, I'll get out of my covered calls early. I'll take, my 70-75% profit. I'll get out of them early. And depending upon what the market's doing on Friday, it may give me another window to immediately jump back in and, get my position, get a position open for the next week on covered calls at a higher rate. My other 2 positions I'm in, those are straight up call positions. I bought those. They're not doing good right now. I've got December 3rd $4 progs, which are not doing too well right now. And I've also got, for 2 weeks later, I've got December 17th prog calls. Those ones I can ride out a little bit longer because, they're another 2 weeks out, which means I've got time for those to turn my favor. To come back around for me, and those once I once they hit my stop loss, which on those, because they're lower value and they're they're not bulk positions, they're not those aren't meat and potatoes. My risk tolerance is a little bit higher for those. Normally, I would try to maintain. I don't like going over a 30% loss, but because they're smaller positions and the potential gains, if Prague starts making a run, the potential gains are huge. So, but those I give them a little bit more leeway in the risk department, and that's that's fun gamble away money. The bulk of my position is in AMC, so I take those a little bit more serious. Granted, I take all money serious, but those ones I bought them further out to give me time for price action to move around and come back. So JB, are you staying in the chat? You hanging out? Got any options questions? Would you look at that? We got 6 likes on the live stream already. In fact, let's go ahead and pop over onto Prague. Yeah, Prague that was an ugly day for Prague. Grant, I think most of the market might have been following that trend. Also, looking at the SPY did SP 500 did recover nicely. They had a good push. They closed green for the day. Yeah, both the SPY and the Qs both turned green, ran green today. I should almost add the Russell 2000 up on here also. So this weekend, I'm not sure if I'm going to be doing any streaming. Yeah, the SPYs, the Russell, and the Qs, they all had about the same price movement throughout the day. But yeah, this weekend I'm going to go through, play around. I might set up some different watch list on here for different stocks. If you notice, a lot of it's crypto. I've got a BlockFi crypto wallet, and that's where I do most of my crypto trading is on that wallet. So I've got the positions, most of the coins that are on there: Bitcoin, Ethereum, Link, Uniswap. There's some others. Those are on here just because it's easier than me having to open my wallet all the time. I can just pop on. I do most of my technical analysis on Webull, so having everything for my crypto wallet listed on my Webull just means it's less stuff I'm opening, and most of those are set it and forget it. For those of you who don't know, BlockFi has a Visa credit card, and I actually picked that up. I was on. There's a video by Joseph Hogue. He is a financial advice person, and he's got some really good videos out there. But he had a video on this BlockFi credit card, and did a little bit of research on there. And the BlockFi credit card, it is a crypto wallet, and you earn 1.5% back on all purchases as Bitcoin. Now the Bitcoin is nice and everything, and what I like to do is I use that for all my recurring. I've got a Netflix, I've got an Amazon Prime account, so I do streaming, and I've got all of those. I've even got my car insurance and my cell phone bill on there. It automatically goes to that credit card, and I get 1.5% back as Bitcoin. And the great thing about it, so the Bitcoin's good and everything, and I collect the Bitcoin, and when Bitcoin runs up, I actually sell part of the Bitcoin that I get on there, and I take that money and invest it in the stable coin for BlockFi, because right now they're paying like 9% interest on your stablecoin money. So I'll collect a little bit of interest there, and I'll watch for dips on the crypto market for the crypto that is on BlockFi, and if a dip comes in, I'll move positions back over to the crypto positions away from the stable coin. So kind of playing around with the interest there, collect a bit of interest, and then move out and get into crypto positions, waiting for them to move back up again. So I'm bouncing back and forth between the stable coin and the crypto positions, and I'm making pretty decent money there. So yeah, what watch list is this? All stocks. That can't be all stocks. No. Yeah, I'll play around and add a couple different things on here. I should have the IWM on there. I should have the Qs. Granted, Qs and SPY they run together for the most part, not exactly. So for the people in chat still, what might be some subject matter that y'all are interested for later on? I mean, are there any people looking towards long-term portfolios? How to build positions up like that, or how to build portfolios? You know, not financial advice, of course, but you know, just look towards analyzing. Maybe if somebody wants to look at different strategies as far as options go, because there are a ton out there. And I think actually one thing I was looking at the other day that I did not bring up. So we were looking. I don't know if y'all have ever taken a good look at the P and L graphs. So say I wanted to enter these the bull puts for the 17th of December at the 35.36. Oh. So you can actually see on here limit order. Oh, these are actually the wrong way. There should be. I know on the phone app there's a flip button. Oh, sell. Okay, there we go. So this turned that around. Oh, Danelle's got a question. I'm new to all stocks and crypto. So far, Clay's been the only person I listened to, just trying to learn them. Yeah, there's Clay's channel is absolutely phenomenal. Part of the reason why I hang out in there every day. Every day he's on there. If I can be in there, I will be. So yeah, you can actually bring up the graphs, and this shows you based on where you can move it around, see where the different prices are. And it kind of shows you max profit. So this sets it up to where you're doing a 10 option block on here. I don't actually do my trading on Webull. I use Webull mainly for my for the technical analysis. But yeah, you can look and you can see based on where the price is when you enter these positions. Now, when it shows you it on here, this is telling you at expiration. The share price at expiration, where your profit and loss would be. Because if you zoom in, you can see the angle right here. So if you draw a line from corner to corner, 36 down to 35. So you can see in the middle, taking into account premium that you receive, it shows you right where your profit and loss would be. That's your middle ground. It's hard to get zoomed in on this, but when it tells you, when you enter it, it tells you where your break even is. Your break even is right where the green and red cross, right where the angle goes in between your sell and your buy. So anywhere on this side, this is where you're in your profit. And of course, keep in mind these numbers are based on 10 contracts. I can actually go in. All right, so we're on single contract now. Yeah, I think just because of how far I'm zoomed in to get everything to fit where I can see. Yeah, it's going to push it down underneath Streamlabs. But every investment broker that lets you do options will have some kind of before you enter into your position, it'll bring you to this P&L screen to where you can actually see the wedges. You know, it shows you the colors. Green, you're making money. Red, you're losing money. And you can even do the same thing. And these are the 4-leg options. If you were to click on those, oh, we're on the wrong side. I like to sell. There we go. So you see, if you enter these are dangerous though, because these are range bound. If you get a run up or a run down, you have the chance to lose all your money. But on these, when you're selling, you're still collecting a sell condor. Oh, that's because these are 4-leg. Yeah, it's glitchy. Yeah, anytime you're entering 3 and 4-leg, if you're entering a 3-leg, chances are one of your positions you'll have to double up on. By double up, I mean you would sell on each side and buy in the center, or sell in the center and buy on each side, and that's what gives you your point towards the butterfly. Condors would be flat across the top. I want to exit order entry. There we go. Oh, no. Well, this is annoying. There we go. Finally got rid of that. So, Danelle, do you have any specific questions? Are there any specific things about stocks? I'm okay with cryptos. I just got into them because I wasn't a big fan of crypto initially. I didn't see the value, didn't see the point, didn't understand the reasoning behind it or the technology involved. But now that I've actually started paying attention to that, I realize that crypto's a nice little way to make some money, especially if you get good at reading the charts, your technical analysis. Crypto's a good way to make money, and the fact that crypto's open, crypto's 24 hours a day, and I like trading, so it's nice to be in crypto positions because I can, in aftermarket, when the regular market's closed, I can go out and still try to make money on those. Let's see, Simon, you still working out at the gym right now? Oh, and Clayro just dropped a video. Who got the first comment on Clayro's video? Nick F. Nick F got the first comment, then Pringleton. Just waiting on the AMC squeeze. Yes, well, a lot of us are just waiting for the squeeze to happen. But a lot of what I wanted to teach was just rather than just buy and hold, there are ways to grow your share position using options to get a little bit of money here. I think we are looking at. Justin, I just got into crypto back in May. I love it that I can check it 24/7. Yeah, it's and with the crypto markets, with how down they are right now, the chances to buy, the chances to get in and either open positions or grow positions, and depending upon where your technical analysis is, you can go in and you can make decent money. The better your position, you don't have to risk as much. If you have a larger position, say you've got $1,000 in crypto. I like even numbers. $1,000 in crypto, well, you can, depending upon what coin you're on, especially if you're on something like Sheep Coin, that is like, you get a lot of coins for little, and the fact that with the burns going on, we know that it's going to expand, that the prices are going to go up. They're going to keep burning coin. So being able to trade that 24 hours a day and set your limits and know exactly where you want to buy in, get in and get out on, and take those. If you're playing $1,000 position, you're playing half your position at $500, and you let it run up, or it runs up, and you sell, and you're watching your analysis, it comes back down, and it takes a 2 or 3% dip, and you buy back in. Well, you just expanded your position a bit. So you can keep doing that. You can set triggers throughout the weekend, just like setting your limit orders. You can set limit orders on crypto. If it hits this price, sell that much. And as soon as your sell is executed, you go back in. If it hits this price, buy that much. And you can do with limit orders, and you can do this with stocks, stock positions also. Of course, don't sell AMC. Hold all those shares. But if you have other positions that you're in, you can go through and have it set up to where, and they're rhythmic stocks, and that's why Clay mentioned today about that huge put position that somebody ended up opening for AMC, and they made bank on it because they're watching the trend. They know we're in that wedge right now. So it ran up. They got their puts in. It ran back down. Get out of their puts. It's a huge way to make money. That's how you can do it with options. You can day trade options. You can swing trade options. It does increase your risk. And also, you got to be careful if you have a smaller account. I think most I think it's 25,000. If you're under 25,000, you do fall under pattern day trading. So you have to be careful if that's something that would affect you. You have to be careful because if you enter in a position, I'm not sure if it works when you sell and buy back in, if you get dinged with it. But I know that if you buy a position and you close it out the same day, that they'll ding you with pattern day trading if you're under that 25,000 mark. And that goes for stocks and for options. So just because you're playing options, you still have to follow the same rules as far as if you're susceptible to pattern day trading. Once you get above 25,000, you don't have to worry about that no more. You can buy sell all day long. Stocks, options, doesn't matter which. Crypto does not fall under pattern day trading, so that's another good thing about it. If you're looking to do a lot of active trading, you can do crypto and you don't have to worry about that. But yeah, so if you like to play 2 weeks out, or even if you just like to play the monthlies, we'll look at the December monthlies here. Because December monthlies, I don't know who all was in the chat earlier when I was bringing this up. We see low volume this week because partly could be because of it being a holiday week. Thanksgiving, it's a shorter trading week. No trading on Thursday, and Friday's a half day. I haven't actually looked to see on the week of Christmas because the market is closed on Friday. I haven't looked to see if Thursday is going to be a half day or not. I'll end up looking at that over the weekend. But with these bull puts, looking at the week before, I was talking about locking in your collateral in order to have it the week of a potential lower volume, lower priced week. And Danelle, you were talking about just waiting on the squeeze. Well, if you have money on standby, there's no reason why you can't expand your share count for just a little bit extra money and having money set aside. So this really would come down to two birds with one stone, not killing them, just knocking them out, and that they fly away later safely. I'm not advocating violence towards any kind of animals. But we look in this week on AMC, we'll be closed out today at Is that the current price, 38.89? I don't know if that's the current price or the market close price. But say, and of course I like using $1,000. $1,000 is a nice round number. It just sounds nice, rolls off the tongue good. $1,000. But if you look, the week before Christmas, the options that end on the 17th. If you wanted for the week of Christmas to have $1,000 on standby, just in case there's a downward price movement and you could jump in and get some shares at a really nice discount. These 34-35 bull put spreads. Paying out right around, Danelle, where do you see Prague going? Give me just a second here and we'll go over some Prague. But looking at it, even if we look at the mid-range is 40. Well, we're not even at $40 a share right now. So if you had $1,000 and you didn't have a problem with locking it up, not financial advice, but you could enter into these bull put spreads. I don't see us being down around that range, but keep in mind, you're going to have theta working on your side the whole time. Well, what's the theta on these? Theta about half a cent a day right now. It's gonna end up going up as you get closer to expiration. The theta will increase, but you're going to see on your spreads, you're going to see a lower theta because you're dealing with two contracts at once, and one of them is you have the difference between the two strike prices, and the difference between two strike prices is reflected across the entire board. But at $40 per contract that you'd receive in premium, so if you entered into 10 contracts, well, today you could buy 10 shares. So, Danelle, you were asking about where do I see Prague going? You're up a little bit and was debating on selling and putting it into more AMC. This week, now, I've actually got two Prague call positions, and I wouldn't call them YOLOs, but they for me, they have a higher risk tolerance. Normally, I would try to have 25 to 30% risk. I'll let these run further because I'm looking Monday or Tuesday next week. After the holiday week, I'm looking to see if we get a little bit of a run. I'm not expecting a huge run or anything, but I'm actually down on both positions and looking to close them out. I don't have a problem taking a loss on them. Any loss hurts, but it's not like wiping out my portfolio losses. They're smaller losses, they're smaller positions. But I'm anticipating a little bit of a run up maybe on Monday, Tuesday next week. I'm hoping to exit both of those positions maybe on Tuesday if we get a good run up. I don't want to hold them too much longer because let me have a look here on the dates. These positions are set for, I've got one set for the 3rd of December, one set for the 17th of December. And Theta is going to start ramping up on the ones that are expiring on the 3rd, which is next week. So I definitely want to be out of those no later than Tuesday, regardless of where the price movement's going, because as we get further in the week, the Theta is really going to start kicking in on those, and that's going to let's go single and Prague. Those are going to start to hurt as far as Theta Decay. Looking at a lot of these, looking right now, half cent, almost 2 cents, a little bit over 2 cents. I don't know why these are so much lower. Usually they should be moving downward, or moving in a straight line. Those Thetas. I'm wondering if Webull is having some glitches, because I've noticed before also, because everything, as you get closer to the strike price, it should be, the number should be increasing as you get closer to strike, or as you get closer to the current price. So to see it go from 0.03 up to 0.025, 0.024, and then back up to 0.2, that looks weird. I'm wondering if that might be a typo or a data glitch on those. But as you get closer to expiration, that theta is going to ramp up on all of these, and they're going to start to lose value faster. So yeah, I do not foresee holding those past Tuesday, at least on the ones that are expiring next Friday, because I don't want to be fighting theta that far into the week. In a perfect world, we'll get a run up on Monday and be able to close those out. Even if I break even on them, take 10% loss. I'm not worried about 10% loss on those. Justin asking, is options bad for the squeeze? All I keep hearing is people saying stop buying options and only buy shares. Okay, so a lot of that people are going for the people are buying calls that expire that week, and basically they're buying calls at a higher price, and they're buying these, and they're like, yeah, if we get the run up, these will hit. If we get the run up, these will hit. Well, at that point on a stock like AMC, unless you're buying them on, we'll even go into, this is a perfect example of day trading options. Let's get back over on the chart. So Justin, if you were looking and you saw it come down, bounce, come up, run down, bounce, you see it come back up above the last bounce. So it almost predicted an upward trend here. Now, when I got into my bull put, I actually waited for it to come down, test again. So it came down, we had the bounce, we caught an upward trend, hit resistance, came back down. It did go down further, but also when it moved back up, it went further. So what we would have been looking at, had it, just like you get the narrowing channel, you can get a widening channel also. It is possible that it would have come up, bounced, ran back down, hit again, and actually fallen harder. It would have fallen down into this range before taking another longer run. You can see patterns going like that. They don't. I wouldn't say they don't happen that often, but you really have to look for some of those, and that is a stock that is just moving wildly all over the place. So it starts to run down, and it bounces back up, goes back down, you hit resistance, or you hit support again, and it bounces up, and you see the higher high. When the higher high hit, this was telling you that you had the possibility of getting the trend. I can put lines down if it helps people, but you notice that it was going to be trending upward. Just the fact that it bounced, came up, I actually waited to see if it would go down and hit again, and when it hit with a higher low than the previous bounce, I knew we were on an upward trend. That is when I jumped in on my bull put spreads. Now, if you wanted to, if you saw this bounce and start to move up again, you can actually enter into calls, and you can enter into weeklies. Weeklies, because they end in that week, of course your theta is going to be ramped up, but with the volatility, it would negate throughout the day if you planned on getting out of those the same day. If you knew beyond a shadow of a doubt you were not going to be holding these beyond today, then when you caught that bounce, if you decided to enter into calls as it came back up, you would gain. And this is where knowing when to take your profits, knowing how much is enough for you would really come in handy. Because as you were running up, yeah, you did hit the top and come back down, but then again, same thing. You had a higher low, and it turned around and ran for a pretty good run right here. So yeah, if you saw that bounce up, higher low, and then started to move again, if you trust your technical analysis, and of course it's easy to come in afterwards and say, oh yeah, looking at this, yeah, you can see that beautiful run coming. No, it's not guaranteed. There are no guarantees on any of this. That's why a lot of this is non-financial advice. But if you trust your technical analysis, and if your risk tolerances are there, and if you knew for certain you were not going to hold these beyond the close of the day, if you knew you were getting out of these today, yeah, it might be worth taking the risk and trusting your technical analysis, because in this instance, it would have, by the time you got to the top here, even anywhere in this range, if you saw it run up and zoom in and you saw this run of red candles pushing down, you're like, okay, that's it. I'm taking my profit. I'm getting out right there. Yeah, that would have been a really nice score. I actually, if I would have been in a position today to actually enter, that would have been a nice little day trade right there. That would have been gorgeous. It would have helped you. It would have increased. You would have made money, and you can go out. You could have gone out on these contracts after they were all said and done, and you're like, man, I've got money. Depending upon how much you put in, how much you made, like from there. Well, what does that equal? That equals increasing your share count. I hope that it may not have been the answer you were looking for, but hopefully it gave you a little bit insight for it. But a lot of people they buy these contracts for the end of the week and they hold them till the end of the week, and that's part of the problem right there. Is they're basically giving money away. And that's why I was talking about the prog calls that I have. Half of them, or a portion of them, are ending next week, and a portion of them are ending 2 weeks after. Well, I know that if I ride those to expiration, that they're just going to keep losing value. They're going to keep losing money, and it's going to keep putting money in the hands of the people trying to short us. Yeah, it's no problem. Justin, that's part of the reason why I do this, because there a lot of the channels just they give you a good view of what's going on. They give you good technical analysis, but options really are, I don't want to say they're a niche, but options, they get lost in the shuffle of buy and hold, buy and hold. And they really are, when you learn to see what's going on, and you learn your risk tolerances, and you develop trading plans for yourself, they are a chance for you to gain more money. And if you are a diamond-handed ape and you make money off of options and you increase your share count, well, how is that bad for the community? Because you're taking that money, you're buying shares, and you're not selling them. So isn't that kind of how buy and hold works? And that goes back to knowing how to strike back at the people shorting the stock. Carbon Fiber Viper. This whole project, this whole channel, I want to help people understand, how valuable of a tool learning how to play options can be, and how to strike back, how to generate wealth. Not generate wealth, but generate more income, generate revenue, capital, to where you can put it into buying those shares and holding them. That is, that is because we heard about, there are so many times people talk about, I want to get these calls, and then you hear people towards the end of the week, I'm down on these calls, I don't know, I'm down on these calls, and I'm hoping the price will run up so I can sell them. It's like, they should have already had a trading plan in place, knowing when they were looking to sell, not just, I'm going to hold till Friday and see if I can sell them. And that was actually, the whole mindset of I just bought these calls, so what do I do with them now? I want to help the community get away from that, and people look at their risk tolerances and analyze and figure what they want to be able to do with them. What is the purpose? You want to enter calls. What's your end game? What is your outcome that you're looking for? Are you looking to day trade them? Do you buy them? Now, here's another thing, Justin. I was talking about day trading those. Well, you can even take your options further out. So day trading is where you buy and sell in the same day. Swing trading is where it's similar to day trading, but you actually plan on holding them for maybe a day or two, maybe 3 or 4, or maybe you're pushing them like really further out, because AMC, if you so you hear talk about the channels, and anybody can put lines on a graph to show the channel, and I don't want to say they can manipulate the data, but it can be confirmation bias. They know what they want to see. They know what they want to show, and I can put lines on the chart everywhere to show what I want to see, and it really, you can actually fool yourself into thinking something's there that is not. But talking about the large put position that Claybro had on the stream, that guy, he had a trading plan. His technical analysis was good. He knew right where, he knew his entry, he knew his exit. So we can actually, if we drew out, where are the lines on this? I'm used to doing drawings. Okay, there we go. Trend line. Oh, wait, wrong thing. No. I don't play with these lines that often. Is there an undo button? Oh, okay. I have to ask for a new line. I don't play with trend lines either. So looking at it, depending upon what range you're looking at, that's a pretty nice looking trend line right there. So we're actually on the lower end right now. I would actually, this little run right here could be fooling. See, I always hear people talk about the wedge, and we got a nice straight line across there. But I would even go so far, this may not actually be the bottom of a wedge yet. I would actually look, we had a channel established right there, a run right there. We did dip below it a little bit right here and a little bit right there, but I think that this, and this is the same thing, you can manipulate the data to show what you want to show. But I think the bottom of this channel, from this vertical to that vertical, and the bottom part splitting the difference right there. So me manipulating my own data here, with the exception of these two little dips right there. If you notice, we're fairly well bound, and it even gave me an upper edge right here. So if you look, I might want to play with that later on. It is possible we might have a little bit more of a downward push unless you're looking at the upward wedge. I'm having fun right now. This is fun kicking all these lines out. So we've got a wedge and we've got a channel. You can actually, if you wanted to, and if you wanted to look at this and track it to see, in science, you come up with a thesis, and can data support your thesis? Well, not only do we have the pennant wedge here, and we got a channel. So I would look to see, do we break down and tag this line again? If we ran through and tagged that line again, that would be a point where I would maybe be looking a month out and maybe be looking to enter some calls. And the whole reason I would enter the calls a month out is because theta is your enemy. The further out you get your calls, the less theta is going to affect you. So even if you bounce off the lower edge of the line coming up for your pennant, if you bounce off that, you still have a gap where you're going to move up, because you come down, tag, and that's why getting the data to show what you want, because it ran all the way up. It didn't actually make it quite down to that wedge. So do I make my line from here to there, or do I make my line from here to there? Well, if I make it from here to there, then it's actually going to shift down because you almost have a straight line across. So you can almost make it show or fool yourself into thinking that it's something it's not. And that's why getting calls that are ending that week it really is a gamble, because you could just have a little bit of a swing here, a little bit of swing there, and the data is going to change what you're seeing. It's going to change not only what you're seeing, but how you perceive it. And a lot of it deals with your own perception. So I know in my mind that if we run down and tag this, which if you notice, this is right outside that zone, because I entered those 34, 35 bull puts. Well, I entered into those looking at this chart before I even put any of these lines on here. I entered in that position this morning without even looking at the market, without seeing what it was going to do today. So in essence, I've got the bull put spreads that I entered this morning are confirmed by data that I'm looking at after the market's already closed. Looking at that trend line, I wasn't even thinking about that until just now. I'm like, well, wait a minute, where's that line at? We're right around the 36 mark. Well, my bull put spreads, now I'm almost certain it's never going to run down and touch, because I'm actually looking for it to run in this zone and bounce off of it. If it runs down, and if it does tag this 36 zone, that would be, like I said, I would look a month out, maybe 3 weeks out, a month out. I would maybe enter in some calls, and I would swing trade those maybe for about 2 or 3 days. Not too much further than that, because you can let them play out, but if I can take profit after just a couple days, well, that's money that I can use to turn around and enter into another position. So who do we still have in chat right now? This has been a pretty good live stream, in my opinion. Hopefully everyone in the stream is enjoying it. And we've been going with this. Wow, we've been doing this for an hour 15 already. And also something I'll be looking to do in the near future is I don't know if there's anyone here who ever jumps on TMI's channel. He's usually got some music running in the background, some non-copyright, I think he calls it lo-fi music. Just something in the background to fill up the emptiness of the sound. So I was thinking after this week I may end up doing that on future live streams, just to add a little bit more. That way, I don't know if Simon's still in here, or he's still at the gym working out right now. But, maybe get some music going in the background. That way, not only does he have the technical analysis, all the options information, but he's got a little bit of tunes, or maybe he's got an earbud in one ear with music and me on the live stream in the other, if he's still in here. That's something YouTube should do, that like have it to where you can actually get in and see who's in the chat, because I know some people have directed specific types of questions, so it might actually make it easier. Might make it easier knowing who in the crowd is still here. And I'm actually going to move this back up, because looking at it, my logo was covering the entire video up. Oh, there we go. Trying to get my spacing here. I had it set up to where during the regular, for looking at multiple stocks at once, I had it spaced out to... Oh. Okay, Danelle, thank you for coming by. I'm happy to provide info to anyone anytime they want to drop by during any live stream. I hope you have a wonderful Thanksgiving. Don't know what anyone's plans are, but hopefully spend time with your family, eat some good food. Don't forget, on Thanksgiving, one of the things we like to do is to before we get dinner, we like to say what we're thankful for and go around circle, and of course, family, health, and loved ones. Those are what the holidays are about. So I hope you have a good evening, a good Thanksgiving, and we may end up doing this again on Friday after hours. I know Clay Rowe is going to be streaming half day. There may be a lunchtime video, even though the market will be closed, but I may forego that and just do an evening live stream. But thank you for coming by, and hope you have a good evening and happy holidays. So who do we still have in chat with Danelle leaving? While we're waiting, is there a way? Chart setting, add to watch list. Can I read? Oh, no. That's not what I was looking for. Oh, there we go. Oh, I can even change the color of the lines. That's cool. Yeah. You'll be back, or you'll be back. Yeah, thank you very much. And yeah, it's I'm gonna keep doing these and keep getting keep having people come in and people asking questions, and certainly keep the stream going. So, who do we still have? It'll be cool to actually understand what all the information on YouTube means as far as concurrent viewers, and I should ask Clay Rowe some of this stuff because he's certainly up to date on everything. What are some other positions to look at? So yeah, I'm going to keep this going. I'm guessing the remaining 2 or 3 people are audio listeners. I'm just going to check out some other positions, and unless we want to wrap up the stream, I don't have a problem continuing on with it. But I'm going to look at some other positions here and maybe give a little bit of feedback unless I see direct questions come in. I'm currently going to be looking at Ford, because Ford is actually the first stock I ever purchased. And to give y'all an idea, not counting the ETFs, as far as actual individual stocks, I believe Ford is in my top 5 stocks for size. So it's a pretty substantial size of my outside AMC portfolio. And averaged in my average cost currently is $12.45. So that'll tell y'all. Looking at the share price right now, is $20.24. So I'm up big on Ford, and I love Ford. My last 3 vehicles were all Ford. My next vehicles will continue to be Fords, unless the MOAS is really nice to me, and then I get like a 72 Ferrari GTS 365. That's one of my dream cars. Either that or a 1967 Daytona 500 Ferrari. Either one of those. I like old Ferraris. Nowadays they're all aerodynamic and stuff, and they look cool. They're fast and everything. But I'm sorry, if I'm getting a Ferrari, I'm getting it for the style. But chances are I'll end up with like a pickup truck or something. I had 2 Mustangs, and Minnesota winters and Mustangs don't go too well together. And my other ride is a Harley, so got rid of those, got something more practical. I've got a 2018 Ford EcoSport. It's the titanium, and it is four-wheel drive, and it is wonderful. I can set my phone up to automatically start it for me. Like the old days of getting up in the middle of the night to start your vehicle so it'll start in the morning. I don't have to do that anymore because I just go through and I can tell my car to start itself every 4 hours. Yeah, Ford's chaotic. Let's see if the 5-minute looks any better. Just kind of looking to see here on Ford what we might have going on. What do we got here for dates? So this is in November here. Got a pretty decent channel at 19 to 20 and a half. So I actually want to have a look here. So we're going to go 9 days out, and I actually want to look at just kind of looking at some other positions here to see if there's some other trades I want to enter into. Maybe on Friday going into next week. When you find a stock that's channel bound, meaning it trades horizontal, trades sideways. I know I mentioned during other live streams, I say when a trade goes sideways. I meant that in if the trade goes south on you, if the trade goes bad, if it turns on you. In this instance, when I say going sideways, I mean literally trading horizontal. So we look and so I'm looking here. Let me go back to the channel. And we're looking at 19 on the low end. Granted, it did step up, but that's a 2-day period. I don't know. It ran up, it touched up, it had a high of 2079. So 21 would actually be the top end here. And unfortunately, 20 on the short term, but all you have to do is go back a couple days and you're below there. So that's kind of a wide window, and it has not established itself. And that's why Webull, I tend to actually not do option trading on here, just for the reason that they build them out themselves. Let me go in options. If you notice, they have these ranges built themselves. Other brokerages have it to where you can actually build your own custom trading strategies. So right now I'm on the Condor. Well, the Condor, it's going to run for each price individually. It's going to take into account all the strike prices. You can go in and you can change the width. So I could actually go, if I wanted to, and change this up to $1.50. That's going to mess with the option chains on here because it's still trying to do $1.50 spreads across everything. So being at 2025 right now, and with Condors, if you're going to enter into a pre-built, and not financial advice, but I don't like pre-built, if you're going to enter into a pre-built, you have to pretty much determine whether you want the Condor above or below. Is this even giving me good windows here? So looking at it, this would actually be, is this better centered? Using their spreads on here, and I hope it's on selling. There we go. Much better. A Condor is an advanced trading to where you are buying a call and selling a call on the high end, well, preferably on the high end because you want a channel bound stock, and you're selling a put and buying a put on the low end. So basically, you've got your call spread above the strike and your put spread below, and you want the share price to remain in the center of those. That way you're collecting your premium on the high and the low at the same time. And like I said, these are more advanced ones. I'm just, if I see questions pop up in the chat, I'll direct towards those. I'm just kind of giving you a run through on these just because it's something that I'm looking at right now. And as you develop option strategies and understand them more, these are things you can look to do in the future. But yeah, like I said, I'm just kind of waiting to see if comments come up in the stream. So what do we got here? Of course, I was talking earlier, these are 4-leg contracts. Oh, that's weird. Those are actually not showing up on the stream. I wonder if it was like that earlier when I tried showing these. I thought earlier... Oh, that is weird. Now I lost that window. Oh, that's why. Okay. Weeble getting tricky with me. It actually put that in a separate window. Trading, open entry. Looks like we still got people hanging out in the chat here. I just want to know how. Oh. Okay. Yeah, so as I was talking earlier, I think it was during yesterday's stream, I was talking about, there are different contracts you can open with multiple legs on them. You've got your singles, and like the bull put spread is a 2-leg contract. Well, the condor is a 4-leg contract, and as you can see, now on this one, you're buying a call, selling call, buying call, and you're hitting 4 different strike prices. So this is why I said you want a stock that is range bound, because you want to stay in the middle of this. And as you can see, this one it's got the $20 strike, the 21.5, because in $1.50 increments, the $23 and the 24.5 or the 24.50. And we can actually go through, take a look at the graph for this. So say, because it annoyingly did not let me actually put it where I wanted it to be centered. So say that Ford's share price was at $22 today. And you can see, as long as it stays in this range, you're going to be making profit. And as it moves around, you're going to be making, you'll make more and less depending upon where the share price currently is. Now, with the condor is flat across the top because that is the middle point in between the 2 calls that you're selling. And of course, when you're selling calls, you're collecting premium. When you're buying calls, you pay out premium. So as long as you're in the center, you're maxing your profit the whole way across. It's never going to change. Once you move beyond one of your calls, that's when you start to lose some of that value at closeout. Because technically, this call now is in the money. It can be exercised against you. And once you get out of that range, all of a sudden, you start losing money on it because the amount that you would have to pay in to close it has now become more than the money you would receive. And this, of course, is a spread where you would put up collateral. Looks like we currently only have 1 in chat. I don't know if this is an audio listener. Hey, thank you, Justin, for stopping by. Hope you have a happy Thanksgiving, happy holidays. Uh, of course, if you can like, subscribe, kick it out to your friends, let them know that any of them that are looking to get involved in options. I don't know if any of them are in trading at all, but if they're looking to get into trading and looking for a place to ask questions as far as option trading go, I'm more than welcome to have everyone come in to stop by, join the stream, give their input, ask questions. And looking, and I think this might actually wrap it up for the evening. But of course, thank you everyone who stopped by on the live stream today. Anyone who watches on the replay, if you can like, subscribe, post it to social media, put it out there on Twitter, on Facebook. Let everyone know. We can grow this channel, and certainly get the channel growing to where I don't have a problem doing this. If if there are 3 people in here, 5 people in here, 10 people, don't have a problem with small groups asking direct questions. We're all here to learn. I am not a perfect trader. This is not financial advice, but any information I can get out to the community to help you make a more informed decision based on your research and your analysis, I'm certainly glad to help. And we'll be doing this again. We'll be doing this anytime during when the markets open, Monday through Friday. I'd like to get wrap up videos, Q&As at the end of the day. We'll be doing during full market days. We'll be doing a midday lunch option. Not really a wrap up, but just kind of showing where the day's gone so far, and maybe look at some positions that are open to enter into to try and make a little bit of money here and there. And depending upon how the community views it, may actually do some Q&As on the weekend, or if people are looking for direct information, I would certainly not object to doing live streams on the weekend to help people, maybe plan moves that they might want to make out during the week, because the weekends are great for doing analysis and seeing where everything's going to move, and it really gives you time to look at the positions that you're going to enter into, and gives you time to plan out your week. And when the market's open, there's always a chance of getting into a FOMO position. Well, if you're doing your research on the weekend, and if you're developing your trading plan when the market's closed, well, it gives you time to think. Is this the best trade for me? And it will help you avoid FOMO, panic buying, and panic selling. So yeah, we may do some of these on the weekend. I certainly would like to. Numbers on a screen. Well, I love looking at them and seeing where they're going to go. So hope everyone has a wonderful Thanksgiving, a happy holidays, and after Turkey Day, we'll pick this back up again for a bit on Friday and see where we go from there. So hope everyone has a good evening, and talk to you on Friday.